Hey everybody, I'm Mike DeSepoli and this is episode 56 of the Ask the Advisor show. Today we're talking about the risks that are associated with investing in the stock market. We thought this would be a really good topic to discuss given the current state of affairs in the economy and the stock market. Obviously, markets are doing very well. And if we know one thing about investors is the better that stock markets perform, the less they tend to think about the risk associated with their money. So we wanted to compile a couple questions here today that people have asked of us through our work and lay them out for you guys, provide some answers this way. If whether you're somebody who's brand new getting started and unsure about what risk is, or somebody who's a seasoned veteran, we can give you a couple things to keep your eye on to make sure that you don't take too much risk or more than you're comfortable taking. So the first question that we generally hear from a lot of people is, what are the risks that are associated with investing? And on a very simple basis, the number one risk that you need to be aware of is losing money. There's always a possibility when you're investing in stocks that you could buy a company or buy stock at a certain value, and that could be worth less one day down the road when you look to sell it. Even worse, it could be worth nothing one day depending on how poorly that company is potentially run. So these are risks that you have to know when you come into the market. Obviously, not every company presents the same amount or same level of risk, but you have to understand when you do invest in the market, you are putting your money at risk and there's a possibility to lose money. Some of the other risks that are associated with investing in the stock market are economic risks. Maybe you own a good company, you own a good stock, but the whole U.S. economy goes into a recession that would likely drag many of the companies down in value with it. So that's a risk when you're investing, as well as geopolitical risks. A war breaks out, things happen where tensions rise around the globe. That could have an offset effect on global markets, sending values lower. So that's another risk to be aware of. And of course, inflation, right? Inflation eats away at our purchasing power, and if the rate of inflation begins to rise too quickly, it could result in lost value in stocks. So these are some risks that you need to consider before investing. Now, maybe you're already managing a portfolio, maybe you've been doing it for quite some time, and you never really consider risk. So now you're wondering, well, how do I manage risk in the stock market? And the first thing is you have to make sure that you are diversified. Have several different investments that make up your portfolio. Do not put all your eggs into one basket. I know that can be tempting at times when you see a stock or an investment that's doing very, very well. You want to put all your eggs in that basket and ride the train with it, but it's not the best strategy. It's not a prudent approach to investment management. You want to diversify your money across many different areas of the market. So if one area does well and another one does poorly, at least you're not hedging all your bets on one singular investment. You also have to pay attention to the economic signs around you, and this comes down to doing research. If a true investor cares about their money, they're going to do research about the things that they're investing in as well as the economic environment that we're currently in, so you can have kind of an expectation about how your money should act in the market. We don't think that investing should be treated like gambling, where you kind of just go into it with no strategic approach, no blueprint of a plan. We think you really need to have an idea of what you hope to accomplish and continually do the research to make sure that the information that you're acting upon is still current and relevant. And another question we get a lot from investors is, what if I don't want to take any risk? What if I want to invest but I'm not comfortable putting my money at risk? Now, not all investments are created the same. There's investments in the market that present high levels of risk, and there's investments in the market that present low levels or no level of risk. The one thing you do have to understand is that risk and reward in the stock market generally have a relationship with another. The more risk that you take in the market, if markets are doing well, you will likely see greater returns. However, the same can be said when the markets move in the opposite direction. If you're a very risky investor and the stock market goes into a period of time where it starts losing value, you would likely see your account value plummet at a rate even faster than the market if you're taking on an immense amount of risk. So investors that don't want to take any risk, there's plenty of investment opportunities out there for you that have limited or no risk, but you have to understand the trade-off is the returns that you can expect on your money. You can't take no risk and expect outsized returns that are going to beat the stock market. It's just not possible. So these are a couple items that we wanted to lay out around risk. We always think it's important that you continually reassess what level of risk you're comfortable taking and compare that to your portfolio to make sure that your investments line up. I can't tell you how many times that we meet with prospective clients that they may tell us that they're not comfortable with risk, but when we drill down and evaluate the portfolio, it is inherently risky and they may not be aware of it. So talk with your advisors, talk with your accountants, talk with whoever that you trust in the financial world and ask them to help you do a risk assessment on your portfolio. If you don't have anybody to help you, feel free to reach out to me. We're always here to help you guys. Thanks so much for tuning in. We'll see you back next week, episode 57.